All right, welcome back to The Explainer. Today we're diving into something pretty wild. There's an argument out there that a quiet revolution is happening right now. One that could totally change the money in your pocket, or maybe I should say, the money in your digital wallet. So, our source for this explainer says that while we're all busy watching the headlines about inflation and interest rates, something much, much bigger is going on behind the scenes. A huge fundamental split is happening right under our noses. We're talking about two global powers taking two completely different paths when it comes to the future of money. So what does that actually mean for you and me? Let's break it down. Okay, here's how we're going to tackle this. First, we'll get into what our source is calling this hidden monetary divide. Then we'll look at Europe's path, which the article paints as a move towards digital control. After that, we'll see how that stacks up against America's path, which is this really surprising return to private money. We'll compare them side by side, and then wrap up with what the author calls the Great Divergence. Sounds dramatic, right? All right, section 1, the hidden divide. So the whole idea here is that the stuff we hear about every day, interest rates, inflation, that's just the surface level. The real story, the one with way bigger implications, is about who actually gets to control money itself. It's about the fundamental structure of our financial world. And this is really the heart of the argument. The source claims that the US and the EU aren't just a little out of step anymore. No, they're actively heading down two totally separate roads when it comes to money. And the fallout from that split, well, it could be absolutely huge for all of us. Okay, let's jump over to Europe first. According to our source, the big project they're working on is the digital euro. And this whole thing is built on a very particular idea about what money should be. And this quote from the head of the European Central Bank, Christine Lagarde, really sums it up. Money is a public good. That right there, or a source argues, is the core principle driving Europe's strategy. The idea that money is like a public utility, something the state should manage and control. And that philosophy shapes everything else we're about to see. So what exactly is this digital euro? Well, the article defines it as a CBDC, a central bank digital currency. But what does that mean in plain English? The source highlights two key features. First, it's programmable. Think about that. It means rules could be written directly into the money. And second, it's centralized. All of it would run on a blockchain that the European Central Bank has complete control over. Now, this is where the author's analysis gets, well, pretty sharp. They argue that this kind of programmable, centralized money could open the door to 1, total surveillance of everything you buy, 2, what they call moralistic control, so imagine your spending being capped based on certain behaviors, like your CO2 emissions, and 3, if you don't comply, the punishment could be automatic, just bureaucratic sanctions, no questions asked. Now, the official story is that the digital euro is all about financial inclusion and just, modernizing things. But the author we're looking at today, they're pretty skeptical. They suggest the real motivation might be something else entirely, gaining the power to stop capital flight. Basically, to prevent people from pulling their money out of the banks during the next big crisis, a way to lock the system down. Okay, so let's switch gears. While Europe is, in the author's telling, building this kind of centralized digital fortress, they see something totally, almost shockingly different is happening over in the United States. And America's answer? Stablecoins. Now, unlike a state-run digital euro, these are digital dollars issued by private companies. And this isn't some far-off theory. We're talking about a massive, booming market that's already here. The source even points to proposed legislation, which would basically let commercial banks get in on the action and issue their own stablecoins. It's a sign that the government might be actively paving the way for this whole private system to get even bigger. So you might be wondering, what actually gives these private digital dollars their value? Well, according to the article, they're backed by real stuff. For every digital dollar out there, the company that issued it holds an equal value in things like short-term US Treasury bonds, gold, or even Bitcoin. And this creates a really interesting loop, right? The more popular these stablecoins get, the more US government debt gets bought up to back them. It's a kind of self-reinforcing system. And to really grasp how big of a deal this is, the source makes this incredible historical comparison. It suggests we could be seeing the end of the central banking era, the system that pretty much defined the entire 20th century.
The argument is that the US might actually be circling back to something like its free banking era from the 1800s, a time when different private banks all issued their own competing money.
So there you have it, two completely different blueprints for the future of money. Let's put them up side by side and really look at the stark contrast our source is pointing out. Okay, check this out. On one side, you've got the European model. It's centralized, it's state-controlled, and it's all about suppressing volatility. The goal is stability because money is seen as a public good. Then you have the American model. It's decentralized, driven by market competition, and it pretty much embraces volatility as a natural part of innovation. One is about control, the other is about freedom. The philosophical gap here is just massive.
And this brings us to the author's big, dramatic takeaway. They frame this whole thing not just as a little policy disagreement, but as a fundamental clash of worldviews. They call it the American dream meets European nightmare. Pretty strong words, and we're not talking about some tiny niche experiment here. According to the source, get this, 500 million people around the world are already using these private stablecoins. So this isn't just a trend to watch. It's being presented as a massive global force that's already here and operating at a huge scale. The author argues that this American path is really a return to the spirit of free banking that helped fuel the industrial age. Back then, competition was the great disciplinarian. If people lost trust in your bank's money, you went out of business. Simple as that. There were no central bank bailouts to save you, which, according to the source, kept debt in check and sparked incredible dynamism.
And for a final piece of evidence, the source points to something happening right now. It claims that capital is already voting with its feet, essentially flowing out of the EU and into the US. The author presents this as a pretty clear sign from the market about which system investors are betting on for the future. So what are we left with? A really powerful question framed by our source as a choice between two totally fundamental paths. You have one future built on state control and the promise of stability. And then you have another, built on private freedom and the chaos of competition. As these two worlds drift further and further apart, the big question is, which one is going to win? Which one will define the future of money? Definitely something to chew on. Thanks for joining me on The Explainer.